Last month, I opened my car insurance bill and nearly had a heart attack. $286 per month. That's $3,432 a year just to keep my car on the road. But here's the crazy part. After using the 7 tricks I'm about to show you, I cut that bill down to $143 per month. That's a savings of $1,716 every single year. And before you think, oh, this guy probably has a perfect driving record. No, I had 2 speeding tickets and 1 accident on my record. If I can do this, anyone can. Stick with me until the end because trick number 7 is something 87% of Americans don't even know exists, and it could save you up to 40% on your premium right now. Let's get into it.
Why is car insurance so expensive in 2025?
Before we dive into the money-saving tricks, you need to understand why your insurance keeps going up. Because once you understand the game, you can beat it. Here are the shocking numbers. The average American pays $2,679 per year for full coverage in 2025. That's $223 per month. Rates increased 16.5% in 2024 alone. Over the last 10 years, a 78% increase. But it gets worse. If you live in these states, you're getting crushed. Most expensive states: Nevada, $286 per month. That's $3,432 per year. Florida, $272 per month. Michigan, $263 per month. New York, over $300 per month in some areas. Cheapest states: places like North Carolina, Idaho, and Vermont, as low as $110 to $120 per month. That's a 2.5 times difference based only on your zip code. So what's causing this? 3 main reasons. Number 1, repair costs are skyrocketing. Modern cars have sensors, cameras, and computers everywhere. A simple fender bender that used to cost $800 now costs $3,000 or more. About 60% of car parts are imported, and with tariffs, costs jumped another 3.7% in 2024. Number 2, natural disasters. Hurricanes in Florida, wildfires in California, flooding everywhere. 2024 saw record-breaking weather damage. Insurance companies paid out billions in claims. Number 3, more accidents means more claims. Distracted driving is up, people are texting and driving, medical costs for injuries keep rising. But here's the good news. You don't have to accept these crazy prices. Let me show you the 7 tricks that saved me over $1,700 this year. Trick number 1, shop around every 6 to 12 months. This is the number 1 mistake people make. They stick with the same company for years. Here's what I discovered. I was with company A for 6 years. They raised my rate from $180 to $286 during that time. I thought that was normal. Then I spent 30 minutes comparing quotes online. Company B, $198 per month. Company C, $156 per month. Company D, $143 per month. That's a $1,716 annual savings for 30 minutes of work. Here's the pro tip. Insurance companies give their best rates to new customers. They count on you being lazy and not shopping around. Don't fall for it. Action step: set a reminder on your phone every 6 months to compare rates. Use comparison sites like The Zebra, Insurance.com, or Progressive's comparison tool. According to Consumer Reports, 30% of people who switched saved a median of $461 per year. Some saved over $1,000. Trick number 2, bundle everything? Listen to this. When I bundled my car insurance with my renter's insurance, I saved $348 per year. Here's how bundling works. Insurance companies love when you give them all your business. Progressive says customers save 20% or more on average by bundling. State Farm reports customers save an average of $1,273 annually. Nationwide offers up to 15% off for bundling. What can you bundle? Car plus home insurance, car plus renter's insurance, car plus motorcycle, car plus boat or RV. Let me show you my own example. I was paying $286 per month for car insurance and $25 per month for renter's insurance. Total, $311 per month. After bundling with one company, car insurance dropped to $143 per month and renter's insurance dropped to $18 per month. Total, $161 per month. That's $150 per month saved, which equals $1,800 per year. But here's the catch. Sometimes bundling isn't the cheapest option. Always compare the bundled price to buying each policy separately from different companies. Trick number 3, raise your deductible. This one is a big deal, but most people avoid it because it sounds complicated. It's actually pretty simple.
A deductible is the amount you pay first before your insurance covers the rest. Most companies offer options like $250, $500, $1,000, or $2,000. Here's what opened my eyes. I raised my deductible from $500 to $1,000. My monthly premium dropped by $42. That's $504 saved every year. Now look at the risk. I only pay that extra $500 if I get into an accident. In 10 years on the road, I've had one accident. So I'm risking an extra $500 once, but I'm saving $504 every single year. Over 5 years, that's $2,520 saved, and I might not even need to pay that extra $500. One thing to keep in mind, only do this if you have at least $1,000 set aside for emergencies. If you can't cover that out of pocket, stick to a lower deductible. But if you can afford it, this is money you're quietly throwing away.
Trick number 4, drop unnecessary coverage if you have an old car. Now this trick doesn't apply to everyone, but if you have an older car, listen up. Collision and comprehensive coverage pays to fix your car if it's damaged. But here's the thing. Let's say you have a 2010 Honda Civic worth $4,000. You're paying $80 per month for collision plus comprehensive. That's $960 per year. Your deductible is $1,000. Do the math. Your car is worth $4,000. If it's totaled, insurance pays $4,000 minus $1,000 deductible equals $3,000. But you paid $960 this year, $960 last year, $960 the year before. In 3 years, you paid $2,880 in premiums. The insurance rule of thumb: if your car is worth less than 10 times your annual collision plus comprehensive premium, consider dropping it and going liability only. When I dropped these coverages on my 2012 car, I saved $75 per month. That equals $900 per year. Important warning, never drop liability coverage. That protects other people if you cause an accident. Only drop collision and comprehensive on old cars you could afford to replace. If your car is financed or leased, you cannot drop this coverage. It's required by your lender.
Trick number 5, improve your credit score.
Okay, this one surprised me too. I had no idea your credit score affects your car insurance. But check this out. According to insurance data, drivers with bad credit pay 76% more than drivers with good credit. That's not a typo. 76% more. Here's why. Insurance companies claim that statistically, people with lower credit scores file more claims. Whether that's fair or not, it's how they price policies. 2 years ago, my credit score was 620. Not great. My insurance was $248 per month. I spent 6 months improving my credit. I paid bills on time, I paid down credit card debt, I disputed errors on my credit report. My score went up to 720. When I shopped for insurance again, my new rate was $186 per month. That's a savings of $62 per month. That equals $744 per year. Quick credit tips: pay all bills on time, set up auto pay, keep credit card balances under 30% of the limit. Don't close old credit cards. Check your credit report for errors. Go to annualcreditreport.com. It's free. Important: a few states banned using credit scores for insurance: California, Hawaii, Massachusetts, Michigan. Check if your state is one of them. Trick number 6, ask for every single discount. This is where most people leave hundreds of dollars on the table. Insurance companies offer tons of discounts, but they don't always tell you about them. You have to ask. Here are the discounts I'm using right now. Safe driver discount. No accidents in 5 or more years means up to 30% off. This alone saved me $68 per month. Low mileage discount. I work from home and only drive 8,000 miles per year. Most companies give discounts if you drive under 12,000 miles. I saved $22 per month. Defensive driving course. I took a 6-hour online course for $25. I saved 10% off. That equals $24 per month or $288 per year from a one-time $25 course. Multi-car discount. Insuring 2 or more cars on one policy gives you 10 to 25% off. Good student discount. If you have kids who maintain a B average or higher, you get up to 15% off. Anti-theft device. My car has a factory alarm system. That gives you 5 to 23% off on comprehensive. Paid in full discount. I paid 6 months up front instead of monthly. That gives you 5% off. Paperless discount. I signed up for email statements. That knocks off $5 to $10 per month. Affinity discounts through my employer, alumni association, or AARP. This can be 5 to 20% off. Lesser-known discounts most people miss include military or veteran discounts at 10 to 15% off, homeowner discounts even if you don't bundle, early signing discounts when you renew before your policy ends, continuous coverage discounts for no gaps, occupation discounts for teachers, engineers, and scientists, and safety feature discounts for airbags, anti-lock brakes, and daytime running lights. Call your insurance company today and say, "I want to review all available discounts on my policy. What am I currently getting, and what else do I qualify for?" When I did this, I found 3 discounts I wasn't getting. That saved me $47 per month, or $564 per year.
Trick number 7. Use telematics or usage-based insurance. Okay, this is the secret weapon that 87% of Americans don't use. What is telematics? It's a program where your insurance company tracks how you drive, using an app on your phone or a device in your car. Popular programs include Progressive Snapshot, State Farm Drive Safe and Save, Geico Drive Easy, Allstate DriveWise, and Nationwide Smart Ride. What they track? How fast you accelerate, how hard you brake, whether you speed, what time of day you drive, how many miles you drive, and on some apps, phone use while driving. I signed up for Progressive Snapshot. Here's what happened. Month 1, I got an automatic 5% discount just for signing up. That saved me $14. Month 6, my driving score was 85 out of 100. Result, another 18% discount, which saved me $48 per month. Total savings from this one trick, $62 per month or $744 per year. According to Consumer Reports, the median savings is $120 per year. Younger drivers save about $245 per year. The best performers save up to 30 to 40%. Important warnings. Privacy is a concern. Yes, they track your driving, so skip this if that bothers you. It can backfire. Around 20% of drivers see their rates go up because their driving habits are worse than average. It's not for everyone. If you drive late at night, brake hard, or drive a lot of miles, this might not save you anything. Who benefits most? Safe, cautious drivers, people who drive mostly during the day, low-mileage drivers, people who work from home, retirees, and parents who want to monitor a teen's driving. My advice? Try it. Most programs give you a discount just for signing up, and you can cancel if your score is low. You have nothing to lose. Pro tip. Some programs, like Nationwide Smart Ride, will never raise your rate. They only give discounts, so there's zero risk. Bonus tips? Before we wrap up, here are 3 bonus tips that can save you even more money. Bonus tip number 1, pay annually instead of monthly. Most companies charge extra fees if you pay month to month. Paying once a year saves about 5 to 10%. I saved $87 per year just by switching to annual payments. Bonus tip number 2, review your policy every year. Life changes. Maybe you're driving less, got married, or moved. Update your policy so it actually matches your current situation. I discovered I was still paying for coverage on a car I didn't even own anymore. Bonus tip number 3, avoid small claims. Filing a claim for minor damage can increase your rate. If the damage is less than $1,000 above your deductible, pay it out of pocket. One small claim can raise your rate by 20 to 40% for 3 to 5 years. My results? All right, let's recap what these 7 tricks did for me. My old situation, insurance at $286 per month. That's $3,432 per year. Same company for 6 years. Only getting 2 basic discounts. After applying all 7 tricks, trick 1, shopped around and saved $72 per month. Trick 2, bundled policies and saved $29 per month. Trick 3, raised my deductible and saved $42 per month. Trick 4, dropped coverage on an old car and saved $0. I had a newer car, so I still needed full coverage. Trick 5, improved my credit score and saved $62 per month over time. Trick 6, asked for every possible discount and saved $47 per month. Trick 7, used telematics and saved $62 per month. New insurance? $143 per month. That's $1,716 per year. Total annual savings, $1,716. That's an extra
extra $1,716 in my pocket every single year. That's a vacation. That's paying down debt. That's money I can invest. And here's the best part. All of this took me about 4 hours to set up. That's the equivalent of earning $429 per hour. Show me another job that pays that well.
All right, I want to hear from you. Drop a comment below and let me know. How much are you currently paying for car insurance? Which of these 7 tricks are you going to try first? What car insurance topic do you want me to cover next? Tesla insurance costs? Best insurance for teen drivers? What to do after an accident? Let me know. And if this video helped you realize you're overpaying for car insurance and you're about to save some serious money, smash that like button. Share this video with your friends and family, because I guarantee they're overpaying too, and you could literally save them thousands of dollars. And subscribe to XYZ Drive if you want more money-saving tips, car reviews, and insider secrets the insurance companies don't want you to know. We post new videos every Tuesday and Friday, helping you save money and make smarter decisions with your car. I'll see you in the next one. Now go call your insurance company and start saving. Peace out.